Hi, welcome to this channel. I want you to be rich. Today, we're going to talk about part 3 of 3 financial goals that you should reach by the age of 30 or 40 or 50. It's never a bad time to start after talking about how you can pay off your debt, managing debt, and why there's good debt and bad debt. The second part where we talk about savings, and now we're going to talk about the third part is how to start investing. My name is Lee. I talk about money, investment, and personal finance. So, I want to share my story with you so that you can understand how difficult it was for me to get started. Even as a trained accountant and in economics, I didn't know anything about investing when I was 17, 18. And the most difficult part for me and my story is that I really didn't know how to invest in shares. I know I have to do investing. I know there's inflation, but how do you actually get started? And that was the problem. How do you actually get started? And my breakthrough was really when I opened a investment account, a brokerage account with one of the brokerage online. It was very easy. It wasn't really that difficult like what I imagined. Once that was done, it was very easy. But before that, I was so scared of investing. I think watching movie like Wolf of Wall Street on Hollywood really makes investing looks complicated and scary. But in fact, investing is a lot simpler than what we think. So I'm going to go through a few things on how you can invest, how you get started, and what you should look out for, and how you cannot, make the kind of mistake that I'm making. So if you are investing, you're basically owning a share or a share of a company, meaning you become an owner of a company, or you go through a fund and the fund invests in the company, such as an index fund. And when you own shares, you're hoping for 2 things. Number 1 is called a dividend, and number 2 is called capital gain. So a dividend such as Visa, Coca-Cola, we have all swiped our card at Starbucks or bought a can of Coca-Cola, and both of these companies are listed on the stocks exchange, and you can buy 1 share at a minimum. And I think Visa costs about $200 or $300, and we'll include the link below for Google Finance so that you can see how much is a share. And say if you have $200 and you bought 1 Visa share, you're hoping for 2 things. Number 1 is that it goes from $200 to $300 because the company has done very well over time, and you can sell it to the next person for a higher price. So basically, this hope that the prices of these shares in the company goes up. Number 2 is that they pay a dividend. So what is a dividend? So Visa makes money from its business, or Coca-Cola, and they started giving out some of the money back to their shareholder, and that's called a dividend. So 2 things, capital gain or a dividend. Of course, shares can also go down. So if you bought it at a certain price, it can also go down. And there are several ways to invest. So number 1 is long term. So you invest for 5 years. You put money that you don't take out for 5 years and hope that overall it goes up. And number 2 is short term, where people do day trading, meaning you buy and sell according to the highs and lows of the stock market. And according to Warren Buffett, 90% of people lost money to day trading. So I highly advise against you trading your money if it's not anything 5 years or more. Studies have shown that people invested less than 5 years lost a lot of money. So don't become a day trader. I strongly advise against mimi trade, but if you have to, be prepared to lose the money. So this part, I'm going to talk about how you can open an account and then start trading. So you should find a reputable brokerage because that's very important. That's where you put in your money, and you open an online account. There are a couple of ways that you can open an account. First, you can open a Roth IRA account. That's for retirement. So you can't take out your money ever until you're retired. If you ever touch that money, there will be heavy penalties. Or number 2, you just open an account. A lot of these accounts that I'm going to show here are $0, and you can open them. And they are one of the, I think, reputable largest one in America. So what is a brokerage account? They are basically licensed brokers to deal with stocks exchange such as New York Stock Exchange and the Nasdaq, so that you can buy shares through them. And we need licensed brokers because they have systems that helps you tell the stock exchange what price you want to buy. So one of them is Merrill Lynch, Fidelity, Charles Schwab's, and you find them very easy nowadays online. You just need an ID, upload, go through the app, and most of them has no initial deposit, meaning that you can start with $0 and check out how much commission they are charging when you buy shares. It's not a lot. I would like to point out that you should only invest in money that you don't need to take out for at least 5 years, or if you haven't started a 401k, consider starting one because your employer might have the 401k matching. So for $1 you invested in, your company is going to match that. Obviously there is a cap, but there are a lot of tax advantage deductions that you can do with your 401k, which I'll talk about in the next video, or you can just Google. So you can consider 401k or just a brokerage account. So a lot of people ask me about taxes. So do you have to pay tax? Yeah, you have to pay tax, but you don't have to pay tax if you don't make money. So if you didn't get a dividend and you didn't make a profit from buying and selling your shares, you don't have to pay tax. You can just open a brokerage account. If you don't have money yet, open a brokerage account. Look at the stock market to Google Finance and start to learn. Okay, so how do you start to buy shares? The rule of thumb to buying shares is to look at the history of shares. And I personally use Google Finance. I look at the history of shares. And if you look at my other videos, I like this thing called Value Investing by Warren Buffett. Warren Buffett is the chairman heading a company called Berkshire Hathaway. He's the third richest man in the world for a reason. His investment has averaged around 20%. And he invested in very good quality company because he talks about how value investing works is that you look at a investment as a business partnering. So you don't buy and sell the shares according to the highs and lows, and you don't try to time the market. You only buy at the right price according to its intrinsic value. Sounds complicated, but basically he bought companies and their shares in the open market at a reasonable price. So you might want to look at historical prices, whether it's high or low. Often when the market panics, such as during a war or bad news, the prices plunge a little bit, and it's not a bad time to pick up some shares. But the most important thing is to start a brokerage account. And number two, if you don't know, click on the portfolio below and see what Warren Buffett invested in. Maybe that gives you an idea of what these companies are. Always try to see if they are in the S&P top 10 companies as well as the Nasdaq top 10 companies, because companies like that has been around for a long time and has a big market capitalization, and that really helps reduce the risk of them going bankrupt. Although big companies can go bankrupt as well, but if you're talking about Apple, or if you're talking about Visa, if you're talking about companies like Amazon, the chances of them going down, what I would say, is not as much as, say, a smaller company, because Apple has $2 trillion of cash. So having said that, so these are called blue chip shares. Last of all, if you don't want to pick your own stock, you can do what Warren Buffett suggested for people who are not, just want to lay back. You don't get such a good return, and there are some risks to investing in what you call the S&P index fund. So basically you put it into a fund and someone is investing in the S&P for you, the Standard & Poor's index for you, and there is a chance that this fund collapse. And also funds collect fees. Although very low, there is still a fee, and so you can track the S&P fund. Vanguard is one of them that offer the S&P fund. Other than that, you can invest in your employer's 401k and be tax advantageous, or you can do all three. You can invest in the S&P's index fund, you can open your own brokerage account using your own cash, and you can invest in 401k. It doesn't have to be exclusive. I will include the link below on our Google Finance on how you can check prices. And I will also include the kind of shares that Warren Buffett, Berkshire Hathaway has invested in. I think he's a good investor. He reads the book called Intelligent Investor by Benjamin Graham on value investing. It's a little bit complicated for a beginner, but I find that very valuable on the idea that you are a long-term investor, because it really reduces your risk of investing. And also, there are a lot of apps and companies now that offer $0 per trade. It doesn't cost a lot. The thing is to try to buy a good share, a blue chip company, and to hold it for at least 5 years, not to gamble in the market with your hard-earned money, so that you can really see how investment is. We often underestimate $35 a week. What can $35 do? What can a $6 cup of coffee do for me in a day? A $6 a cup coffee for a week over a lifetime is $1 million by the age of 58. So think about it and have good habits. If you want to form good habits and stop buying coffee and try to save up some money without suffering, automation is your best friend. Automate your coffee machine in the morning using some of the tools I'm going to put down, as well as forming good habits. Read Atomic Habits. I included the link below on Atomic Habits by James Clear. It's a really good book. It changed a lot of my habits. And follow YouTubers who encourage good habits and start learning investing. I wish you all the best on your investment journey. This is Lee signing off. Good luck.